All right, back in action. Stocks by the numbers, Super Microcomputer Incorporated, symbol SMCI, here on the NASDAQ. I'm sure you've seen that the stock took a hit today. Let's talk about what happened here. 40.89 on the close, down about 4.5 points, 9.75%. The stock pulled back basically right to this fib here. You can see there's a one-year chart. We ended up climbing up, got right above resistance that we were speaking about recently, and then we had this news hit today, $2 billion convertible note offering maturing in 2030. So this is like a debt slash equity raise. The people who are accumulating these notes and buying into them have the option to convert them. That's why they're called convertible notes. You have the option to convert them into shares if the stock price continues to climb and it hits a certain level. Also, they say that because that could potentially lead to some dilution, SMCI has said that they're going to take a portion of this $2 billion and use it for call options to try to potentially offset dilution and maybe accumulate a handful of shares for themselves. So the stock, again, down almost 10% after hours, down about another nickel right now in the high 40s. Market cap down to sub 24.5 billion. So, you know, 2 billion raise, market cap was like 26, 27 billion in change. So actually less than 10%. The stock technically took a larger hit than it should have, but understandable because they say that supposedly this came out of left field, but we all know that it takes money to make money. So we'll pull up an article here that just kind of breaks it down a little bit. Disclosed plans to raise $2 billion through a convertible note offering. Unsecured bonds will mature on June 15, 2030. Proceeds will be used for general purposes, and about $200 million will fund capped call transactions intended to limit dilution from future share conversions on the notes, right? Again, if the stock climbs quickly, they will own shares, which will potentially lead to dilution. So this company is now doing what's called capped call transactions to limit dilution. Initial buyers of the offering will have the option to purchase up to an additional $300 million, roughly 15% more, within 13 days of issuance. Stock gained 40% year to date. Offering raised concerns about investors' potential share dilution. Shares have experienced heightened volatility. Yeah, obviously. Met NASDAQ requirements. Still at reduced sales guidance in May. New debt plans suggest Supermicro is preparing for future growth, but the market appears cautious about short-term shareholder dilution. Well, we know that, again, chances are if you're a $25-30 billion company and you raise $2 billion, chances are you're probably doing it for the long-term growth and not the traders going into next Friday and the following Friday's expiration date, right? So, of course, in the short term, it's going to drop down. But, yeah, I really don't think it's an issue. I really don't think this is an issue at all. Obviously, again, they say, oh, they didn't see it coming and all this, but I don't know. To me, it's business as usual. Another 300 million if demand's there. Qualified institutional buyers can convert into stock or cash under certain conditions. Supermicro, 200 million of its own shares. Entering cap call transactions. So essentially, they're taking some of the money as well and buying into calls. And then as the stock price continues to climb, again, they would look to execute and hold those shares themselves. Complex strategy comes with a twist. Could create unusual volatility. Rest of the proceeds. Capital expansion, bullish signal that the company's still betting on growth. Obviously, what company bets on retraction? But the timing and structure of this deal are what's getting attention. When a fast-growing AI infrastructure player like SMCI chooses to raise billions through convertibles rather than traditional equity or loans, the market starts asking questions. Will it fuel long-term upside? That's what it's designed for. Or trigger short-term dilution and stock pressure? That's already happened on the announcement. That's the bet on the table. Okay, so it's very simple. Again, in my opinion, you got to watch that support level in the immediate short term of, what did we say, like 39.15, right? If it breaks that, then I guess you can jump on puts in the short term and catch that breakdown. But again, I mean, they raised $2 billion. They were roughly, 26 billion market cap. I mean, that's less than 10%. Stock just took a 10% hit. So realistically, even if it does come down and test one of these trend lines, in my opinion, it shouldn't. But even if it does, it really should, in theory, immediately bounce back higher. And also, I just laugh because these other companies who, again, I mean, SMCI bringing in roughly 5 billion a quarter, right? Market cap 24.5 billion. One of our favorite trending stocks, ASTS, that isn't making any money, hasn't done anything, continuing to hit highs today, if you weren't aware, closing in on $50 a share, market cap roughly 16.5 billion, without generating any revenue. SMCI 5 billion a quarter. So that's why, again, I still maintain my original price target that I did when we first looked at it, like back here or wherever it was, and $2,000 a share, which would be $200 from here. In my opinion, follow the money, follow the revenue. But I also laugh again because remember how I told you sometimes you have to read between the lines and try to kind of dissect what's potentially going on behind the scenes when you see some of these headlines and some of these articles, right? Now, I just want to bring back up this article here, right? Because look, they break down this whole thing. They review what the stock did. Look, this could potentially lead to share dilution. The shares are going to have, heightened volatility now moving forward, right? We got back on the NASDAQ, which everyone was worried about. But, they reiterated, they reduced their guidance, pressuring sentiment again, right? But it appears the market's cautious, short-term shareholder dilute. You know what makes me laugh? When we hear other companies do things like this, I just feel like I don't see the same type of articles breaking it down the way we're reading it right here. And again, no disrespect to Guru Focus or whatever, but you understand the vibe, the generalization of what I'm trying to tell you. Right? Most other companies, it's like, yeah, they issued some shares. There's a little dilution. They're going to use the money for, general corporate purposes and expenses. Boom, that's it, right? You get a news update. That's the end of the article. But you notice with something like SMCI, they have to consistently reiterate the negatives, in my opinion, to keep you, the average investor, in the dark and uncertain about the situation. Again, as I said, in my opinion, follow the money, follow the revenue. They keep comparing it to Dell. When we looked in the past, Dell has an immense amount of debt, and I know they have demand, and their revenue is growing as well, right? Because, as we say, rising tide lifts all boats. So Dell is getting some attention and getting some demand for their services as well. But the whole time, remember, they were trying to pump up Dell and they were trying to beat up SMCI, even though SMCI wasn't down and out yet. And they were saying that Dell is looking to benefit as SMCI struggles, but SMCI still saying that there's big demand. They still see good revenue to come in, whatever it was, 24, 26 billion for the year. Again, that's the market cap currently. And they're expecting that much in revenue for the year. So that's why, again, if you don't reiterate all of these negatives, and I just dropped SMCI in front of you, and you looked at the fundamentals, chances are, and you looked at future growth over the next 1, 2, 3 years, chances are you would be a buyer. It's that simple sometimes. So, in my opinion, the more I see this, the more I like it. But that's just me. The more I see this, the more I like it. And again, stock was up here. This was $1,200 a share pre-split, right? Now we're still down 66% of that, roughly, a little bit more now after this drop today. Right? So we're down 60-70% from highs still. Even though we jumped over a bunch of the hurdles that we had to this whole time, they were, in my opinion, manipulating the stock and bringing them down. And obviously, even just getting back to the highs is going to be a massive return. And if and when, in my opinion, the stock gets back to 100 plus, I'm telling you right now, no one's going to be talking about these convertible notes that are maturing in 2030 that they issued today, and are we worried about dilution? All of a sudden, that's going to get swept underneath the rug, and you're going to start seeing the articles, SMCI is raging, should you be buying it now? Call your broker, and all those dumbass headlines, right? We also had multiple people again come out and state that SMCI was set to be a major player in the AI space. And then all of a sudden we got hit with, 7 negative headlines. We're keeping the stock down. The growth is there. They already stated the demand is there. And again, if this was a Dell, a Meta, any other tech company, it would just be an update. Oh yeah, we raised, $2 billion in notes, whatever, general corporate purposes, long-term expansion. That's it. End of the article. SMCI, though, we have to consistently reiterate negatives. So that's why, again, in my opinion, I honestly like it even more. I honestly like it even more. And of course, nothing's guaranteed, but I'm going to back up. I'm going to back up a little bit. Look at that. It's completely off. That's how much it ran. Got to take the log off. There you go. So I'm just showing you, this is going back again. This is just the last 4 or 5 years, really. And you can see the steady, stable growth of this stock over the years, and then the breakout as we had the tech explosion and AI expansion and AI demand. So if they were able to do it, that's the way I'm thinking about it. If they were able to do this for years and years and years, it won't even... Do I have to take off the adjustment? No, that doesn't do anything. Like, it won't even fit on the screen. There we go. I'll just stretch it out like that, baby. I will just stretch it out like that. Okay. So now, of course, this looks like chaos over here from my 1,000 trend lines. But let's block out right there, because this is where the drama happened, when all of a sudden this massive shining star tried to get taken out, in my opinion, right? So now if we X out this recent nonsense, look at this. So would you want to own a stock like this? In my opinion, yes. In my opinion, yes. And again, of course, I understand that's just my opinion. But we came back here, wherever it was on the breakup. Yeah, it was like 30, it was like 300 and change. I brought it up. And I said, this is the kind of stock you should be buying. And then we had the absolute breakup, the absolute explosion. So again, just to reiterate, it was white hot. Everyone wanted a piece. Everyone had massively high price targets at the time. If you remember, even up here at $1,000 a share, there were people talking $1,400, $1,800 a share for SMCI. Now, all of a sudden, because it pulled back to these low levels, these analysts have to stay with $36, $38, $45 price targets. But realistically, in my opinion, it's going back up here. And I still say, follow the money, follow the revenue. More times than not, it usually works out. And again, a company set for this type of growing demand, this type of expansion. They were saying also, I remind you, they were saying that 30% of AI servers coming online, they're going to have a hand in. I want to reiterate that as well, right? Potentially 30% of servers coming online. You have 30% of that market, and you're keeping the stock down? No way in hell. No way. So in my opinion, again, I do still like it. And, if you're talking from a trading perspective, oh, is it going to drop? This thing sucks. Should I buy puts? I have no idea. Because I already think this was an overreaction. Especially with the fact that markets stayed up and continued to climb going into the afternoon. Why would SMCI continue to slip? Look. Why would SMCI continue to slip? And then beautifully, in miraculous SMCI fashion, in the very last moment, on the very last tick, we have the highest volume of the day, essentially. Look at that. I am telling you right now, in my opinion, big boys, big players, hedge funds, institutional investors, in my opinion, if I was managing wealth, I would be accumulating shares and building a position down here again. When we first brought it up, it was, November of 23, stock was 300 and change. after the split, that means the stock is currently sitting at 400. So they had all this demand, all this growth, all these positive things to say about, again, 30% of servers coming online. That's going to be us. And the stock only went from 30 to 40. We're still sitting at 40. No way. So in my opinion, I still say it's on sale. And some of you may be getting impatient. You may want to see the stock up at 100, 200. What's taking so long? Does this guy really know what he's talking about? The stock market sucks. They're out to get me. And just remember, if and when this son of a bitch runs back up to 100 plus, 200 plus, and hits new all-time highs, everyone's going to say the same thing. I should have bought more. Tale as old as time. But that's pretty much it. I'll end it there. So once again, this is Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it in the comments section. I'm quick to reply. Thumbs up, algorithm, share the video, all that stuff. Help me out. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.